Elon Musk also on the day, of course, with the offer to buy Twitter. He believes that the company should be private. And in order to do that, the world's richest person has offered to purchase 100% of the social media giant for $54.20 per share. But what are the legal and regulatory considerations for a deal of this magnitude and a profile of his stature? Yahoo Finance's Alexis Keenan has been on the case and joins us now. Alexis, what do we need to know about the legal procedures that may happen next, the relationship even that Elon Musk has with the SEC, as we were listening to about there?
Well, I think Elon Musk is treading some new ground here, and here's why. I've been talking with securities experts about the very untraditional form in which Musk's Twitter offer was actually made. And yes, we would expect a non-traditional avenues for Elon Musk, but the way that this offer was extended, it really lacks enough formality to make it fair to ask if both it's a serious offer and whether it's a legally binding one. So what makes Musk's offer different here, the proposal compared to a typical hostile takeover bid, is that it came in the form of a letter and a text message that was memorialized in an amended SEC filing that was directed to the company's board. But there's really a formal procedure for making this type of tender offer, and it's through SEC filings. And those filings do protections for shareholders of Twitter in this case. So those usually come along with a very formalized offer and also a term sheet. And in that term sheet, you'd have things like the number of shares specified. You'd have the purchase price, the source of the funding, which has been a big deal here, a lot talked about, reasons for the offer, also contingencies of the offer. And by law, the offer must remain open for 20 days. So Musk has done it very differently here with this alternative filing. So it just makes you ask the question whether he's in some way exempting himself from these legal conditions that would really govern this type of offer. So I'm told, if Musk were really serious about it, that he would be going straight to the board, not in this gray area with this letter that's kind of informally addressed to the board of directors. Guys?
So maybe Mark Cuban is right after all. Alexis Keenan, good stuff. Thank you. Elon Musk, always busy on Twitter. He's at it again just moments ago, tweeting this: taking Twitter private at 5420 should be up to shareholders, not the board. And he has a poll up for his 80 million plus followers, and they are overwhelmingly weighing in. 85% of respondents say yes, the shareholders should decide on his bid, not the board. So 85 to 15, and this is no small poll, 281,842 votes already in on Elon's Twitter feed.
About Bill Ackman, Carl Icahn waging proxy wars or short selling the stock, but this episode seems a little bit different. Yahoo Finance's Alexandra Garfinkel is here with more about the activist lens from which to view the developments that we've gotten over the past few days. Give us a little bit more on what you've been looking into.
Sure. So, there is an activist playbook. There's a lot of variance within it, but there is an activist playbook. So, generally what will happen, a Carl Icahn, a Nelson Peltz, they'll come in and they will do a couple of things. The first is they'll acquire 1%, 5%, maybe 15% of a company. They'll make some noise. They'll look to make some changes that are fundamentally about, improving shareholder value. The goal is ultimately to remove an executive who's underperforming or spin off a line of business that isn't really working. Or in the case of Olive Garden a couple of years ago and its parent company, get rid of unlimited breadsticks. Usually an activist is somebody who's a renter, somebody who, may be looking to push a sale down the line, but it's usually not to themselves. They also usually operate with, companies of their own, Icon Enterprises, Tryon, Third Point. So he really has kind of stepped out of anything that we're familiar with when it comes to an activist. Even old school corporate raiders from the 80s, he doesn't quite fit the mold, Brian,
Well, so Allie, that begs the question, is there a comparison here with what we have seen or how we have seen Elon Musk go about his holdings in Twitter? I've heard a lot of comparisons to Jeff Bezos. What are you hearing?
That's the one I keep hearing too. The point I always want to make about that is that the scale is really different. When Jeff Bezos came in and bought the Washington Post, that was about a deal worth hundreds of millions of dollars. Whereas what Elon's coming in with is in the tens of billions. His net worth is well over 200 billion right now. According to Forbes, he is the richest person in the world. So that would be a significant chunk of his net worth. But when push comes to shove, he is dealing in a really different scale than even Bezos was. I would argue that what we're seeing is unprecedented. I talked to a source who a couple of days ago said he seems to be an aspiring activist owner rather than an activist investor.
Elon Musk is tweeting again this morning on his deal with Twitter, saying he cannot move forward with the deal unless the company shows proof of its claim that less than 5% of accounts are fake or spam accounts. And there was also some back and forth with the CEO of Twitter on Twitter as well. Amidst all of this, Twitter did file its proxy statement saying it's going to have a shareholder meeting to vote on the deal. Has not set a date for that, considering that Musk has now put it on hold. But there are some really sort of juicy tidbits within this proxy statement that I found. First of all, if the merger is not completed, the company says in the statement, the price of our common stock may decline significantly. I mean, we all know this, but it's interesting that they're acknowledging it in the proxy. And something else, we've been pointing the finger at Elon Musk for all the back and forth here. Maybe we should be blaming Jack Dorsey. There's a little revelation here in this filing. On April 5th, Mr. Musk contacted Mr. Dorsey to ask Mr. Dorsey his perspectives on Twitter in connection with the announcement of Musk joining the Twitter board. As part of the discussion, Dorsey shared his personal view that Twitter would be better able to focus on execution as a private company. So it looks like Dorsey was sort of nudging him in that direction. Which
also explains some of the timing around Dorsey's departures as well that we had seen, and then prioritization of Square or Block as his main kind of priority at this point in time. But what this continues to signal, and we've had this conversation time and time again, is Elon Musk does not want the smoke for $44 billion. He does not want the problem of having to monetize or figure out who the real people are on Twitter and not going after this company perhaps for $44 billion and pulling back perhaps this potential purchase, even at the same time that Twitter this morning is saying, hey, yeah, we're still going to put this in front of the shareholders at the end of the day. And them moving forward with a vote, I think that's just the signal for Twitter, like, hey, yeah, we're just trying to get this done.
We're committed to this.
What I do find fascinating, essentially you have Elon Musk here questioning the validity of Twitter's financial statements, not just for the past year, but going back many years.
Again, the time to do that is before you agree to buy the company.
Well, he is possibly causing here, whether he gets the company or not, a potential restatement of the company's prior year financials. If those fake accounts are close to 20% like he thinks, I mean, you have to question all of the company's financials since they went public.
What is it based on? We have no idea what his suppositions are based on. The company has always made clear in the statements that it was an estimate. And to your point, for years, the company has said this. And then all of us, this is, speaking of smoke, this is a smoke screen. This is an excuse. It is so transparent that it's an excuse. One of his whole reasons for buying the company was to get rid of the bots. He knew the bots were there. This is an excuse either to get out of the deal entirely or to try to negotiate a lower price. I don't know what's going to end up happening on that front, but it is just patently transparent.
Well, speaking of lower price, I'll just quickly add to Brent Thill, who was on yesterday on the show talking about Twitter. He said in the worst case scenario, if this deal does not go through, you could see Twitter shares crash to $22.
And then do you get a shareholder lawsuit on your hands against Elon Musk because of what he has done to this company? He single-handedly has destroyed, and maybe, right or wrong. In other words, if it's valid that it should be trading lower because of the fundamental business, fine. But he single-handedly triggered a wipeout in value of this company, if indeed that's what happens. And so you have to think that there are going to be shareholder lawsuits.
Absolutely.
In the wake of something like that. One more small thing to mention when it comes to Elon Musk. SpaceX employees are doing a private placement. We don't know if he's included in that private placement. This is according to Bloomberg, that they are valuing this private placement, in other words, a sale of shares on the part of employees of the company is going to value the company at around $125 billion. There is an employee tender that's going to be going on at $70 each. Again, we don't know if Musk himself is selling shares to try to raise some more cash to get this deal done, but it is an intriguing thing that's happening at the same time all this other stuff's happening.
Right. We can't track shares of SpaceX here, at least right now, pre-market. But shares of Twitter pre-market, they are down by about 1.3%. We'll continue to keep an eye on TV.
Welcome back. Elon Musk's $44 billion deal for Twitter is in serious jeopardy. according to a new report by the Washington Post. The report cites anonymous sources that say Musk's team is still doubting the reliability of data surrounding fake accounts on Twitter. And joining us now to discuss is Wedbush Securities analyst Dan Ives. Dan, always great to see you here, as I've been saying on a Jobs Friday. But we got to talk Twitter here. And you're saying there are three paths ahead for Twitter and Musk. Could you outline them for us, please?
Yeah, so I think that there's one, the deal happens at 54-20. I think there's a better chance of me playing for the Yankees than that happening. So let's call that a low single-digit percentage chance, realistically for that. Second, I think if you look at Musk could walk and ultimately try to fight Twitter board in court, we can see the $1 billion breakup fee. And there's a 35% chance that happens. And then ultimately, I think there's a 55 to 60% chance it's a renegotiated price, $42 to $45. That's why we lowered our price target to 43, because I think 54.20 is out the window. I think 43 is probably more realistic, but I think there's a good chance that he tries to walk, fights Twitter board in court, and that's where this just becomes a Game of Thrones in court and really becomes a disaster situation for Twitter.
I just going to follow up on something. You said there's a low percentage chance that you would be drafted and play for the Yankees.
Yeah. So look, but realistically, I think the chances 54-20 happens, and I think you see it in the stock. It's basically at this point zero. I mean, you got to assign some percentage chance. Yeah. But that's why right now it's either a renegotiated bid or ultimately Musk walks. And I think that's what the stock's telling you. I think this report that we saw last night, I think it's tip of the iceberg to what's going to be a lot of twists and turns coming out over the coming weeks. But again, I do have a decent curveball.
Yeah, well, to be fair, Dan, there's probably a lower chance of me playing for the Yankees, so I'll just admit that. I want to throw a theory out your way that I've been seeing on the Twitterverse here. Elon Musk liquidated $8.5 billion worth of Tesla stock. Could this simply be a ruse for him doing that?
Look, of course, that's going to, and it's been out there in terms of the Twitterverse. Look, I think, as we talked about, the tax sale was an overhang, as we saw late last year. We saw more selling of Tesla stock. And, look, it's been a brutal period for Tesla investors. I think it's a $150 overhang in the stock to Twitter deal. Musk selling of stock, has come to an end. But if you look at that combined with the shutdowns that we saw in China with zero COVID, I mean, it has just been a brutal, 6 months for Tesla investors. And I think Musk has started to listen. And I think whether it's a scapegoat or it's a real issue in terms of the fake bot issue, I think he got cold feet. And that's why I think there's a good chance that this deal does not happen, ultimately ends up in court.
Yeah, I have to agree with you right there. And you mentioned Tesla. I want to focus on Tesla for a second. They came out with their deliveries. We've had you talk about that. Just any developments on the China front there? Any new news that you can talk about?
I mean, look, we talked about it on the weekend. Obviously, we talked about it with Brian and Julie. It's everyone knew this was going to be an ugly number because April and May were shut down in China. That's about 70,000 units we think ultimately got wiped out of the quarter. But the reason the stocks rallied is because investors are looking past. They're looking at the month of June. They're looking at second half numbers and into 2023. And I think if you look at the run rate, I think it's been impressive. And I think barring any black swan event in terms of other zero COVID issues, in my opinion, I think Tesla, right now is overcorrected. I think we're really going into a period that demand continues to outstrip supply, despite the haters continuing to hate.
Well, and let's continue to talk about supply then, and specifically the competition for Tesla in China. I just read a report the other day that BYD, I'm not sure if I'm pronouncing that right, they are the #1 electric vehicle producer in the world if you count hybrids. And this kind of came out of left field for me. There is a lot of competition in China that I think is underappreciated by the general public. Can you speak to that?
Yeah, I mean, look, it's a fierce competitive market. You see a huge shift in EVs, let's say, versus the US or even Europe. BYD, I mean, you're talking about a formidable competitor, a phenomenal model that they've built, great production. Look at Neo as well.
Yeah.
I mean, Neo is another good X-Ping. I mean, but look, this is not a zero-sum game. I mean, that's really the call here is that Tesla, it's going to be over 40% of deliveries that come out of China. But as you look toward the next year or two, as they, I think in 2023, get toward 2 million plus in terms of units, China is key. But it's not that they have to just dominate market share, because they're also going to be successful not just in China, but US and Europe. And I think that's an important dynamic now that's playing out. You go back a week ago, if you show those delivery numbers, many of the skeptics be like, Tesla's stock that's in the sixes. Instead, it's 760 because investors are looking forward on the name.
All right, for more on the Twitter saga, we have Brian Fitzgerald, Wells Fargo Senior Equity Analyst here with us. Brian, nice to see you. It has been a wild ride here between Twitter and Elon Musk. How do you think this story ends?
Yeah, thanks, Dave. So look, as you and Alexis just talked about, I think we're at a bit of an impasse right here, the way the current situation is set up. Twitter will tell you, we are sure, they just did this yesterday to the media, that less than 5% of the content on our platform is bots, spam bots. We do human reviews of over 100,000 accounts on a quarterly basis. They've been doing this for years. It's always been a thought with Twitter. And so there's one side who says we're not budging. And then you have Elon who says, look, Twitter gave him a fire hose of data back when he first said he was putting the deal on hold. They've gone through all those data points, all that data, but they're missing one key linchpin, and that's the PII data, this private or identifiable information, email addresses, names, phone numbers, IP addresses. Twitter will never give that up. They can't give it up for privacy reasons. So here's where the impasse is. Team Musk is confident that, hey, we're never going to be able to verify, what that bot percentage is because we don't have that final piece of information. So we're kind of stuck. And as you and Alexis just talked to, I think this ends up in the courts.
So then in terms of Elon Musk then waiving due diligence, how much of the responsibility on not having this information beforehand, at least some of it other than the information that you just mentioned, how much of that actually falls on his shoulders?
Well, Rochelle, it's a good question. I think at the end of the day, it really isn't about the bots. As a matter of fact, that was one of the original reasons for doing the deal. He said, I'm going to buy this platform. I'm going to clean it up. Obviously, this is Team Musk articulating for a lower price. There are very few precedents of that actually happening. Maybe we had one real time or more real time recently with LVMH and Tiffany during COVID, where they articulated for a 5% price cut. The original deal was $54.20. We are far from a 5% price cut there. I think if you look at the percentages of does a deal close, does a deal doesn't close, and let's look at the $32 price prior to the deal announcement, say it's 50-50. That's 50 times $54.20, 50 times 32. That gets you to a $43 price target. That's pretty far below a 5% discount. What the market is kind of telling us now is 20% deal happens at $54.20, 80% it doesn't. Do the math. That's about a $36, $37 target. That's where the price is today. So that's what the street is telling us is, hey, we don't think a deal is going to get done, or we don't think it's going to get done at that price target.
And not a lot of arbitrage play there. The stock went up to $51.70 shortly after the offer was made. And to your point, we sit below 37. Where is it headed?
That's a good question. Meanwhile, I think Twitter is still operating as usual. They're focused on running the business. It's a real business. $6 billion in revenue, $1.5 billion in EBITDA, good free cash flow, $350 million this year. So it's a good business. It's currently trading at 19 times this year's EBITDA, 15 times next. It's growing that EBITDA at 18% over the next 3 years. So, it is cheap right now relative to the fundamentals. They are doing things to improve the efficacy of the platform, to improve targeting on the platform, to speed up the amount of innovation they're doing. Those were changes they've been doing over the last 3 to 5 years. So they are executing to the tasks at hand. I think when you look at Musk's goal of 600 million MAUs by 2025, that's aggressive. They would need to grow at a 27% CAGR to hit that.
And obviously, what he's doing with Twitter also affecting what we're seeing with Tesla prices. How much of an irritant is this for Tesla shareholders as they're watching this back and forth and seeing this focus with Twitter?
Well, I don't cover Tesla, but what I can say is, you're a very smart, intelligent person with multiple irons in the fire, and so it's got to be frustrating when you see him split focus this many ways. Ultimately, I think it's a balancing act with respect to Twitter in terms of free speech versus monetization. Free speech is an important Twitter principle. I get why he wants to do this. It's important for Twitter as well, but you have to weigh the health of the platform, the tone of the public conversation on the platform versus brand safety and suitability for advertisers. So ultimately, that's what makes the magic work at Twitter. For a Tesla holder, it's probably frustrating that that we're being drawn into this drama show.
Dan Ives from Wedbush told Yahoo Finance he thinks it's a 5% chance that Elon goes through with the deal at this price as is. What number do you put that? And the Financial Times had some interesting language from the CEO, Parag Agrawal, that they're willing to go to war to get this deal done. What do you make of that?
Well, so first off, your colleague Brian Sozzi, he did a great interview with Twitter chairman Brett Taylor. He thinks the deal gets done, and he says Twitter has never been more relevant. To Dan's point, I think that's what the market is saying. If you did that math I ran through, 5%, that'll probably get you to where the stock would go to. So right now, if you did the math, just looking at the numbers at 32, that 54.20, that 5% that Dan has and 95 at a cheaper price would probably get you down to $32.
Twitter beef takes on a whole new meaning now. With more on what's ahead, we welcome in Boston College law professor Brian Quinn, who focuses on corporate law as well as M&A. Brian, good to see you. That precipitous drop that Jared just mentioned in the Twitter stock, do you think that factors in here at all as we move into this trial in Delaware?
Well, no, I don't think the stock price is going to really affect the legal arguments that are going to be made in the courts in Delaware. The real focus is going to be on the contract and the way the parties acted with respect to the contract. That's going to be the focus of the courts.
As we look inside this case, then, what will it primarily hinge on, and what does each side need to prove?
Well, the burden of proof here lies with Mr. Musk, since he signed this contract, and the Delaware courts presume that people who sign contracts do so for a reason. And if he wants to walk away, he's going to have to prove his case, which means that he's going to have to prove that, in fact, Twitter did violate the terms, that they're in breach. And he's laid out three different arguments, and we'll see what the court says with respect to each of those.
And Brian, we hear in particular about the term material adverse effect. That's what's been cited by Elon's lawyers. How does he prove that, and do you think he can?
Yeah, that's going to be a very, very difficult claim to win on. In fact, in all of our history with respect to these kinds of claims, it's only ever succeeded once. That was in 2018, the Acorn case. So I don't expect that that's going to be the kind of claim that's going to succeed. So he can make that argument, but more often than not, when people bring in one of these MAE arguments, it's as a way to generate leverage for a renegotiation on price.
Now, as we know, Musk is saying the reason he's pulling out of this is because he's not getting sufficient information on this. But you've said he can't use unreasonable information requests to create a pretext to then claim a violation. How much of a leg does he actually have to stand on based on how he's performed so far?
Yeah, it's a little bit like, Claude Rains wandering into Rick's Cafe in Casablanca and being shocked that there's gambling going on, right? One of the reasons why he did this deal was to take care of the bots problem. I think it's one of the first things he said about Twitter when he acquired it or when he signed the contract or made the offer. So it's kind of disingenuous, I think, right now to say, oh, geez, there are bots, so I can't do this deal. So it's a hard argument to make, but it's one that he's certainly going to try.
And given that, he waived so many of his rights to begin this process, how will that impact the trial? And ultimately, do you think Elon can be compelled to buy Twitter?
Right. So he did waive due diligence. He made an offer, sent over a draft merger agreement, asked them to sign it, which they did. The Delaware courts will treat buyers who are represented by sophisticated counsel, advised by investment banks on Wall Street. They'll treat buyers as big boys and girls. And if you sign a contract, courts are generally going to hold you liable for that contract. So he has a very uphill road to hoe here.
And in terms of perhaps any sort of way out for Musk in this, in terms of either renegotiating the price, paying the breakup fee, or perhaps getting out of this deal without a breakup fee, what do you think is more likely?
So I think there are probably, there are the three options here I think that are realistic. One is a discount on the price. The problem with the discount on the price is likely the Twitter board's going to be amenable to something like 50 or 49 or some marginal number like that. And he's going to be looking at, 30s, in the 30s. If the difference is that big, I doubt very much that the Twitter board's going to go for it. A second option is that the court compels him to complete the transaction, which courts in Delaware have done in the past, and they are not adverse to doing that at all. So if he loses, he could face an order from a court to complete the deal. And a third outcome is that in fact he wants to walk away, and they want him to walk away. At which point they negotiate a settlement. It's not the $1 billion price; it'll be somewhere upwards of that. And I would expect if I were the board of Twitter, I might say, the price is 54. We're trading at 34. Give us $20 a share, and we'll let you walk away. That's the kind of negotiation that'll go on.
One thing we can count on is Elon making things harder for himself. He's already done that, perhaps with this meme he tweeted. They said I couldn't buy Twitter. Then they wouldn't disclose bot info. Now they want me to force me to buy Twitter. Now they have to disclose bot info in court with the pictures of him laughing. If you're his lawyer, what are you telling Elon at this point?
Yeah, I'd be very careful because it goes both ways. I mean, he'll get discovery on Twitter, but then they get discovery on him, and they're going to say, "Hey, Your Honor, it's all just a pretext. He didn't want to do this deal. Let's look at some emails," and that'll be a problem for him if that kind of evidence turns up.
And in terms of what you can compare this case to, obviously, Twitter wasn't even looking to sell in the first place until Elon came along and said he wanted to buy it. Is there anything comparable to this kind of case that we've seen, or how much of a landmark do you think this case might be?
Oh, I don't think it's going to be much of a landmark in the end. These kinds of cases or these kinds of disputes, they happen all the time. Buyer buys a company. Day after they buy the company, they realize, well, geez, I paid too much, and they try to find a way out. Courts get involved, and the parties renegotiate a price. We've been down this road many, many times to date, and I'm sure we'll go down this road again sometime in the future, but probably not with these parties.
Let's move on to Twitter, where shares hit hard today with news of the pending courtroom battle in Delaware. Shares falling more than 11% today. What's ahead for the company and the stock? Angelo Zeno is a senior analyst at CFRA Research. Good to see you, sir. So shares now down, 53% in the last year, 23% year to date. How much worse are things going to get now that we're headed to court?
Well, I think it all depends on how kind of the battle in the courts really kind of work at this point in time. And, when we kind of take a step back here, we're actually not surprised by Elon's decision to really walk away here. I actually thought it was the next kind of really step in the whole process here. And now you kind of have this kind of really, what we expect to be a fairly prolonged legal battle in the courts. Now, at the end of the day, we do think Twitter does have the upper hand here. And, given that, we do think there is a possibility that they could potentially take, north of the $1 billion breakup fee when all is said and done. So I think as far as a valuation perspective is concerned here, we value the company at about $26 a share on a standalone basis. So things could absolutely get uglier here before they get better. And then, of course, the fundamentals. We're entering a period where not only do we have macro uncertainty here, but now there are concerns about the actual kind of strategic, path of Twitter going forward.
And with that, you've cut your 12-month target price to $33 from $44. At any point, do you think if Twitter does remain public, does it remain attractive as it still has an issue with monetization and growth?
Well, I mean, listen, I do think there is value on the Twitter platform. And this isn't a company that, is worth necessarily, $5 a share. There is value within this company. They do have, a fairly substantial active user base here at about 229 billion. Clearly, they've definitely disappointed here over the last kind of decade, ever since they've essentially gone public back in 2013, much more so than the rest of the industry. And clearly, they do have issues here, whether or not it's engagement levels, among other things. And monetizing that platform is going to be extremely important. I think looking at what the board does here in terms of their next steps, I think is going to be absolutely critical. And I think, clearly Elon Musk has kind of, made advertisers as well as the investment community aware of some of the issues that Twitter has to cope with. And maybe it is, potentially having something along the lines of more of a subscription-based offering along with kind of an ad-based platform. But they have a ton of issues they've got to work through here over the next couple of quarters and years, for that matter.
And to that point, Angelo, even if they prevail in this Delaware courtroom, hasn't Twitter already been damaged throughout this entire process in terms of their perception, and also because, of course, these doubts now that Elon has put out there about the number of bots? And you mentioned what the Twitter board does next. You expect a lawsuit filed any day now.
Yeah, no, I mean, in terms of the lawsuit, absolutely. I mean, that's going to get, that's an absolute. And, this is one of those situations where really the board has all they can do at this point in time is really kind of go at Elon Musk in the courts. And the reason I say that is because potentially Elon Musk could maybe kind of entertain an offer, let's call it 20% lower or even more so. But, Twitter's board can't do that because the shareholders out there probably wouldn't allow that and probably would sue Twitter themselves if they were to try to pull that off. So there are a lot of kind of moving parts as far as that's concerned. But yeah, I mean, to your point, as far as Elon Musk is concerned in Twitter, he's definitely kind of opened this Pandora's box as far as the bot situation is concerned. But that's been an issue for years. Everyone's known that's been an issue for years at Twitter. And really, that's not only a Twitter issue. That's an issue that's been a major kind of sticking point for a lot of advertisers out there across the digital ad platforms and social media platforms out there. So it'll be interesting to kind of see if advertisers out there look for opportunities potentially away from Twitter or other existing platforms out there. I will say this, in the coming years, there's going to be a lot more opportunities and ways for advertisers out there to kind of, utilize different platforms and kind of advertise in ways that they want to.
And do you think there could be any scenario after all this mess that any other potential bidders might be interested in Twitter after what's gone down now with Elon Musk?
Yeah, I mean, listen, this is a company now trading at a market cap of at about 25 billion or so. At this point in time, I wouldn't necessarily say there's any sort of white knight that's kind of out there or interested bidder. I think there could potentially be, interested kind of private equity firms over time if we were to see kind of the stock really get annihilated here over the next kind of couple of quarters and years, depending on how this case kind of plays itself out. But at these levels, I'd probably say no, especially when I start looking at the broader ad space and social media platforms out there, where there are probably actually better opportunities out there given the hits we've seen across the broader space.
All right, CFRA Research Senior Industry Analyst Angelo Zeno. Thank you, sir. Appreciate it.
Elon Musk is pumping the brakes on his $44 billion deal to buy Twitter, citing a lack of information provided to properly assess the number of fake accounts on the platform. Now, Twitter says it is committed to closing the transaction and plans to pursue legal action. Joining us now to discuss is Technalysis Research President and Chief Analyst Bob O'Donnell. Okay, Bob, you largely expected this. Many people actually expected this as well. But in terms of what comes next, it seems that shareholders, they're going to fight for this deal. And so what do you expect the Delaware courts to now move forward with? And what is Musk going to have to prove versus Twitter going to have to prove?
Well, yeah, obviously the shareholders are going to go after it because this was a fantastic deal for them. And clearly it's fallen apart. I mean, look, ultimately the problem is you've got a man who makes emotional decisions about a lot of things, apparently, in his life, and then he has to deal with the consequences. And that's clearly what happened here. In terms of what the court's going to do, it's hard to say. I mean, there's no question that he made a commitment that seems legally binding And something is going to happen. If he pays that $1 billion, then he pays the $1 billion. For him, it's not, frankly, that big of a deal. For shareholders, for Twitter, on the other hand, of course, it's a huge deal because not only is it a financial blow, but it is a bit of an emotional blow, certainly in a sense to them, because the value of the platform all of a sudden gets derided even further than it unfortunately already has. And he was seen as potentially being some sort of savior for the platform. And there were all kinds of elements going on here. And so it's a big problem sort of from a psychological perspective. And, I think it's going to end up being a very ugly court fight, as a lot of people suspect, because obviously the Twitter shareholders and the existing Twitter board is going to fight super hard to get it. Musk clearly is not going to be fighting very hard to get out of it. And a lot of messy things are going to come out. I mean, things like, monthly active user numbers, all these things have been debated in social media for years and years. And maybe we'll see even more of the sort of the dirty laundry that goes on in terms of how those numbers are created. The fact that we're talking about a million accounts every day have to be deleted sort of speaks to it. And by the way, that's not unique to Twitter. Those problems happen on social media in general. It's the state of where we are, unfortunately. So all of those things kind of come to a head when it comes to this deal and this trial. So it's going to be a very interesting soap opera to watch. That's for sure.
Hey, Bob, it's Julie here. It's good to see you. I was looking at Twitter's revenue growth this morning, and we have definitely seen after a pandemic bounce in that revenue that it has come back down. And, this is obviously not really a growth company in the sense that, social media was once seen. Is that, you sort of just spoke to it, but if you could give us a little more detail, is that the fault of Elon Musk? In other words, it was sort of bumping along before this whole thing, but it wasn't seen as anything spectacular. But right. Has he torpedoed its prospects in a real way?
I think that's a serious question that a lot of people have. And I think there's a very real possibility. I mean, look, we've all seen, for the people who are on Twitter, there are some people whose lives are built around Twitter, and that's literally everything practically that they do there, their incomes and everything else. So there's a very dedicated, strong group of followers and believers. And then there's a lot of other folks who are like, yeah, whatever. And the thought that Musk was going to come in and that's going to bring excitement and new capabilities and new other things to the platform all of a sudden did give rise to, hey, you know what? Maybe they can turn these things around. With him walking away, that's what I was saying. It's a huge psychological blow because it's like, oh, well, maybe not after all. And it just continues to bump along as it is, which makes it not a particularly great investment and frankly raises questions long term about the platform.
Bob, isn't this great news for the folks over at Meta and Snap, even TikTok? I mean, you're essentially watching a competitor drown in real time.
Well, you could certainly make that point, Brian. I mean, that's obviously, I think a number of people are going to see that in the short term. It does raise questions longer term about how any of these platforms, other than one or two, can really do particularly well from a financial perspective. But yes, absolutely. I think you're going to see a lot of people, the sharks swimming around as these follies continue. So on the one hand, you're going to see Twitter want to fight to get what they can. On the other hand, they don't want to drag this out too long because if they do, I think you'll see people get even more concerned and even more of the sharks circling and making more aggressive efforts to do what they can to take whatever audience Twitter has and move them to their platforms or take advantage of whatever things they have. So it is a very real concern, and it's going to be very interesting to see.
But Twitter has already pulled back some of its own features that it implemented. Fleets that fleeted pretty fast away from the platform. We're continuing to track Spaces to see where that might be monetizable in the future. But when it comes down to engagement and seeing monetizable daily active users, what is this company going to have to do to continue to see that type of engagement, or what type of spending might that even really entail to roll that out on the platform?
Well, I think what we've seen over time is there's this realization that when it comes to Twitter, it's never going to be a particularly huge audience, but the thought is, it's an influential, important audience. Therefore, the value of reaching that audience is higher than it would be on other platforms, right? I mean, if we think about the amount of money that people spend who have regular Twitter users versus the amount that people spend who are, there are kids that are on Instagram or what have you. That's about the only argument you can really make sort of from a longer term perspective. And I'm not sure how well that's worked, because I think that's been tried up till now, and it hasn't really dramatically changed it. So it's a good question. Again, we're seeing a lot of challenges with social media. It's become this incredibly influential thing in the world, but it's also created an incredible amount of divisiveness and anger, and all of these things are going to play themselves out with this trial. And like I said, I think it's going to bring focus on that whole notion of daily active users and monthly active users, things that have been kind of questionable, I think, and from a measurement perspective for a very long time across all of these platforms. And that may have a blowback on the industry as a whole as advertisers start to see what the reality is versus what they've been told.
Yeah, and it's already under fire because of Apple changes and everything else going on. Bob O'Donnell, it's good to see you. Technalysis Research.
Twitter sued the billionaire yesterday to enforce the $44 billion agreement from Musk to buy the company. So what happens next? Let's bring in our expert panel for more on this. Yahoo Finance's legal correspondent Alexis Keenan alongside tech editor Dan Howley. Let's start off with you, Alexis. Just kind of break down what the filing yesterday is alleging, what they're seeking to get out of this, and what the next steps might be.
Well, at this point, Twitter is saying through this complaint that they want Musk to go through with the purchase, pay the $44 million, and let's move on with Musk as its new owner. But what the complaint says on its face is that Musk has buyer's remorse, they say. They say they have a seller-friendly contract and that Musk is just going to have to live with those terms that he negotiated himself along with his attorneys. They say that that contract is not contingent upon whether or not the company shares the fake account information that Musk is asking for. And they also allege that Musk has breached the agreement itself on multiple other violations. They say that he's been disparaging the company publicly. They say that he was accumulating on Twitter, nonetheless. They say that he was accumulating stock without disclosing it early on before the purchase, and that he needed to disclose that to the SEC. And they also say that he has failed to give updates for his financing. So Twitter addressing those claims very specifically in its complaint. And they say that as to the claim that they didn't share that bot data, that Musk, before the contract twice, once on April 21st, said in a securities filing that his offer was no longer subject to business due diligence. And they also say later on April 24th that Musk's counsel sent a draft agreement saying that it was not contingent on that due diligence, but doesn't say that in the actual contract. So that's what the judge is going to have to look at.
I heard somebody describe the language in this lawsuit as that of a jilted lover. It was pretty strong wording,
yeah,
right? I mean, it was.
Yeah.
And so, Dan, we were talking about this off camera, but really, where does this leave Twitter? I mean, all the legal analysts out there are saying, look, Twitter's on sound footing here, but of course we don't know how it's all going to play out in court. Is Twitter going to be okay even if Musk says, you know what, I'm willing to pay the $1 billion, and the court says that's fine?
I think it's better off if they just ditch him entirely. It's wild to me that this is a company now, and obviously, the executives are looking out for shareholders. The shareholders can get their money at $52.40 a share versus what it's trading at in the $30 range.
So not better for the shares though.
Right.
The shares are going to drop.
Right.
You're saying as a company, it's still going to be better.
Without him, it would be better because they will be able to continue the business of business, right? They're not able to do that right now because people inside Twitter are figuring, who is my boss and when will I find out for sure? Obviously they had to do some hiring freezes because of this. They had rescinded letters saying that we wanted to hire people. So they're all in limbo at this point. I think without Musk, they don't have to deal with that, as well as that nagging question of what would he do to change the company as far as moderation goes? That's been his, the big thing that's been stuck in his craw was first it was the bots and moderation. Now it's all about the bots. But the moderation issue, I think, is a larger problem and one that if it went forward the way he's saying it would open up Twitter to a huge amount of issues and potentially lose advertisers.
So, okay, this raises an interesting question, though, because that means that if Twitter ends up winning their argument, which is Elon, you have to follow through on this, that might not be good strategically for the company going forward. So let me just open this up, I guess. What is the ultimate goal here? Because this was Elon's fight to pick, and now this is going to be his legal battle to maneuver, right? What's the end game here? What do you guys think is his end game?
That's the $1 million question, isn't it? I mean, we don't know.
$44 billion question.
$44 billion.
That's a lot of P's.
Plus maybe damages, maybe more than that. One theory is that Musk really wants to expose the actual number of spam bots on Twitter. He's pushing really hard for that. He's trying to get this information exposed. Twitter has acknowledged in the complaint that it does not have a great methodology for figuring out what that number is. And yes, they have long been public about that fact, but it is spelled out there. And to Musk's point, they don't really have a very tight way of explaining that number.
No, here's, before you answer, Dan, here's sort of a contrarian take. I don't know, maybe it is a contrarian take. Hindenburg Research putting out a tweet today saying we've accumulated a significant long position in shares of Twitter. Twitter's complaint poses a credible threat to Musk's empire. And that's not a conversation we've necessarily heard. Everything is about how this is all going to hurt Twitter.
Not how it would hurt Elon Musk. And I think, that leads to the question of does he have his hands in too many different jars, right? He's got Tesla, he's got SpaceX, he's got, don't forget, the Boring Company, and Neuralink, and now Twitter, potentially, if Twitter can prove that he does have to buy the company. To me, this comes down to two things. It comes down to his own hubris, right? He wants to be proven right, and that he doesn't need to buy this company. He just wanted to essentially say, look at how many bots there are. Now, that goes back to when there were people impersonating Elon Musk on Twitter, hawking all these different crypto schemes, bilking people out of their own money, and then making Elon Musk himself look bad. But it also goes to the moderation issue that I was bringing up before, where he just doesn't want a muzzle on him, or what he sees as a muzzle on him, put on by Twitter. He wants to be able to say whatever he wants. And so that's, in my mind, where he wants this all to go. That he wants the moderation to be opened up so he can post whatever edgy memes he wants, and then essentially just say, look, I won. But now he just shot himself in the foot for $44 billion, potentially, seemingly, or $1 billion or more for damages. So, I mean, to me, this just seems like it was.
He said it was all about free speech. Remember that?
Yeah, it's not.
The discussion
now
started?
Now it's about bots. See, like it just feels like a child,
this is
like
just
a petulant child.
Remarkably unfathomable exercise, I guess, for a billionaire to do.
When you have that much money, it doesn't matter.
Well, he's personally on the hook for $33.5 billion, which also affects potentially more of his Tesla stock and Tesla's price ultimately. So a lot at stake.
Which means that you both will be very busy over the next few months, maybe longer. Alexis Keenan, Dan Halley, thanks so much for that.
Twitter is not going away quietly. When it comes to Elon Musk, the social media company is now, as expected, suing the billionaire to try to force him to actually go through with the $44 billion buyout. Twitter said it, quote, bent over backwards to get Musk the information he had requested. It also claims Musk only pulled out because of the downturn in the markets. Here to break down the latest developments in the saga, Yahoo Finance's senior legal reporter, Alexis Keenan. Alexis, this filing, the suit, was interesting reading. I mean, my TLDR of it is they basically accuse him of lying, but maybe not in so many words. Yes, and then some. Yeah.
So here's the nutshell version of the complaint. Twitter is saying that Musk basically has buyer's remorse now and no longer wants this company, is trying to weasel out of it. They also say that they negotiated a seller-friendly contract that is not to Musk's favor, and that's what it is, that he's going to have to live with that. They finally say that Musk has multiple contract violations already. How? They say that he's been disparaging the company, driving its stock price down. They say that he also accumulated stock in secret, so much so that he should have been reporting it to the SEC and didn't. And they also allege that he has failed to keep the company updated as to his financing milestones that were required in order to back up his side of the deal. So we have some central questions in this complaint. These are the things that the parties are going to ultimately litigate over. The first question is, under the contract, did Twitter have to share information that Musk wants about the number and percentage prevalence of fake accounts on the platform? Does he have the right to get that in his hands and analyze it for his own purposes? To that point, here's what the complaint says. Here's how Twitter puts its argument. They say Musk announced in an April 21st securities filing that his offer was no longer conditioned on financing or subject to due diligence. Then on April 24th, they say Musk's counsel sent over a draft agreement, reiterated that Musk's offer was not contingent on any due diligence. So the company there pointing to the intent of the parties, trying to tell the court, this is what was being negotiated, this is how we got to the final deal. So that is going to be very important as the court looks at this issue.
Alexis, for the average person out there, help us explain the Delaware courts. How does it work?
Chancery. What the heck's a chancery?
What is that? How fast might this go? Because this has great implications on the stock price, of course. I would argue it's in Twitter's best interest to get this done as quick as possible. Either get your breakup fee or get the deal done.
Right. So the Chancery Court is a sophisticated court in terms of business matters because it's handling disputes day in, day out, hundreds, thousands per year between billionaires, major corporations, multinationals. They know about mergers and acquisitions. So these judges are not going to be fooled by what's in the contract. They're going to look at the contract and be very capable at distilling ultimately what the parties intended here, we hope. But the Chancery Court has its history back pre-U.S. It goes back to the King's Court in England, and it is intended as a court of equity. It's a place where you can go when the law is, as they say, sometimes an ass. I don't know if I can say that. But sometimes
we're streaming, you can say it.
So it is intended to give relief where sometimes even monetary relief won't do the job. For instance, specific performance here. When you need a party to go through it with a transaction, as Twitter is saying it wants Musk to do, well, that can't really be done necessarily with dollars and cents altogether. They need to force him to take an action. So these courts eventually in the U.S. were merged, equity and law, but matters of law sometimes don't work as one might think is equitable. You can think of, for instance, a mom of 5 children going in to steal from Walmart, let's say, and it's to feed her children and otherwise has no access to be able to do that. Well, an equity court might say, well, okay, we know that that was illegal, but we're going to find some equity here. And we're going to say, in this instance, it's okay that that happened. Let's say the state, for example, prohibited Walmart from making an offer that would be reasonable to that woman. So that's a long story, but bottom line is the court has a little bit more liberty to apply rationale beyond just what the letter of the law says. Nonetheless, there is strong jurisprudence about how they come to those decisions, and they are matters of law combined with equity.
That's a great breakdown.
It's really interesting.
Really good. Never understood that or heard that before, but appreciate it so much here. Alexis Quinn, Yahoo Finance's own, helping us keep tabs on all things Musk and Twitter and what's taking place here.
Elon Musk is idiosyncratic. He's unhinged sometimes, but there have been other CEOs in history. In fact, a lot of the real movers and shakers in history in our nation have exhibited similar qualities. I mean, you look at Thomas Edison, William Randolph Hearst, Ted Turner. These are people who also, made a lot of headlines by their, frankly, wild and let's just say different behavior. And their personal behavior was sort of tied in to their business behavior as well. So it was all of a piece.
I mean, it's interesting because at first we didn't really hear much of Elon doing things on Twitter. Now it's pretty much all we could talk about. And you mentioned some of these big names, Edison, William Randolph Hearst, and Ted Turner. Just how, say, unique would you say they are or were?
Well, let's just take a few of them, Rochelle. For instance, Thomas Edison, he had 150 questions he would ask job candidates. Then he took them to restaurants and had them order soup. If they put salt and pepper in before trying it, he would never hire them. He fought with the government. He created the electric chair secretly because he said he was against capital punishment. William Randolph Hearst with the Hearst Castle had, just scores of animals in the zoos, all kinds of crazy lions, tigers, bears, jaguars, chimpanzees, cuckoos, everything. He tried to get us into a war with Spain. He ran for president. He collected tens of thousands of pieces of artwork. He was very anti-Asian and believed in interning Japanese citizens during World War II. He became the model for Citizen Kane, Orson Welles' masterpiece. And Ted Turner, the mouth of the South, 83 years old now, but when he was in his prime in the 70s, 80s, and 90s, turned the TV world upside down, has a plan for what CNN is going to air when the end of the world happens, because he says they're going to run till the end of the world. Tried to fight Rupert Murdoch, or try to get him to do a fist fight, the televised in Las Vegas. Tried to take over CBS, won the America's Cup, called people bozos, said global warming would kill us all, got married and divorced, including to Jane Fonda. So these people were larger than life and did a lot of wild and, different things.
So maybe Elon isn't as out there as we initially thought, or like to think, at least these days. Andy, I'm curious though, just to have you weigh in on Elon Musk and Twitter. If in fact he is forced to go through with the deal, if he does become the owner of Twitter, what would that look like? And what do you think of the mess that we've seen over the last couple of months?
Well, Shauna, and first of all, no one knows how this is going to turn out. No one really knows what Elon wants. The lawyers are going to make a lot of money. Those are three truisms. I think that Twitter is outside of Elon's core competency. I think that, not censoring content on Twitter is naive. You can't allow opioid dealers and terrorists on there. So you acknowledge their limits and you own them, like Steve Jobs blocked pornography from Apple. On the other hand, the more you free up content, audience grows, but then companies don't want to be on it because their ads are near all this junk. And, net, I was talking to Roger McNamee recently, and he was telling me, it really is a big failure. And, that's because it's only worth $28 billion. Meta's worth $445 billion. And if you think, you guys, about Twitter's huge influence when it comes to politics and media and celebrity, it's only in the neighborhood of Snap and Pinterest. And Twitter is much more important and has a much higher profile in our society, and yet it has the same market value as those two, as opposed to Meta. And so it punches below its weight.